All right, so let's do this. Welcome everybody. Good evening, and it's another amazing time to, be with everyone to share with us some beautiful, beautiful things that this class is all about. So tonight, like I said, we're going to be talking about a really, really important concept. All right, it's something that many people have difficulty understanding, but nonetheless, it's something that is robust. It's pretty robust and it works, or at least has worked for me over the past several years. All right. So tonight we're going to be doing an intensive breakdown and cross section of. Sorry about that. We're going to be doing an intensive breakdown and cross section of trend lines. All right. We're going to be talking about trend lines, but not just trend lines. We're going to be talking about the particular beauty of trend lines. All right. What makes trend lines work? What makes them amazing? What makes them worthwhile? All right. Because I know a lot of people who do not trade trend lines, who trade smart money, purely ICT, and they don't believe in trend lines. But I'm going to be showing us tonight, some really interesting things about trend lines that I want you to take note of, all right, that are very, very crucial for you to take note of. So let's begin. So first of all, in order to be able to understand what trend lines are, we need to first of all understand what is a trend. All right. And as we know, can somebody just type in the comment section, just type, let me see what your definition of a trend is. What is a trend? I want to see that. Somebody just type in the chat box, let me know what your definition of a trend is. Who's there? All right, beautiful. Higher highs and higher lows for an uptrend, and then lower highs, lower lows for a downtrend, I believe. Beautiful. Mr. Sheon says something that happens periodically. All right. Do we have any other definitions? Beautiful. A designated pattern of occurrence. All right. It's a designated pattern of occurrence. Beautiful. So now, taking everybody's definitions into consideration, I'm going to be showing us some really interesting things about trend line. All right. So we've discussed that something that happens periodically, right? For example, if this was a wall clock, all right, if this was a wall clock and then we had something like this, all right. So who can tell me what the time is right now? What would you assume the time to be? Just hypothetically, assuming this was a wall clock, what would be the time on this wall clock right now? 3. All right. Now, this is 3, but we don't know if it's PM or AM, Mr. Prince. but still, that's an amazing one. So this is 3, all right, 3 o'clock. Now, what this means is, regardless how many times price, the hand of the clock moves around the clock, all right, we know that every single time that the short hand is pointed at 12 and the long hand is, sorry, this is 12:15. Sorry, this is the short hand. This is the short hand, 12:15. So whenever the short hand is pointed in this direction, all right, and the long hand is this way, all right, we know that this is 12:15. Regardless, all right, regardless of what we see, all right, the weather might not look like it, but every single time that the long hand revolves around the clock, we know that this is 12:15, 15 minutes past 12. Now, the reason why I'm saying this is how trends work, all right? So say, for example, when BlackBerry was still a trend, all right, you know, they would release a particular model of BlackBerry, all right, say probably BlackBerry Bold, all right, and then when that model is released, they would experience a surge in purchases or in patronage, all right, and then gradually there's a decline as people begin to get tired, all right, and then they launch another model, all right, and then after a while it stops being the reigning trend, all right, and then until another trend is released or another model is released, all right. So, and this is how the same thing works for Apple, all right. Probably you've had iPhone 8, all right, and then people bought it. It was the reigning thing in its own season, all right, and then after a while people just lost the vibe for it, probably because maybe Samsung released a new model, another amazing product is available, and then people gradually begin to shift into other markets. And then what Apple does is to release the next one, all right? So you begin to see iPhone X, all right, and all of the other varieties like that. And then people begin to say, oh yeah, I think I've had this. And then you see maybe iPhone SE 2020, all right, and like that, up to iPhone probably 13, 12, and the likes, all right? So this is how trends work, okay? Because it's basically an indication of human interest, all right? And we know that the span of human interest is very short, all right? If you've ever been, if you've ever had reason to probably queue up for something, you realize that many people don't have, you know, the threshold of everybody's patience is limited, all right? So iPhone 8 is the reigning thing, 8 Plus and the likes, and then, you know, people rush it, it becomes a trend, everybody wants to use an iPhone 8 Plus, and then after a while, you know, maybe they release iPhone X, and then, oh yeah, everybody, you know, the market dips a bit, and then, oh, later everybody starts rushing it, oh, this is the latest iPhone and the likes, all right? So this is how trends work, all right? Which means that it, at some point, becomes almost predictable. It becomes almost predictable because we can now begin to see that there's a pattern to it, all right? Price actually follows a certain pattern, and that pattern is something that we can observe on the charts, all right? So please, if you're with me so far and you understand everything that I've explained this much, please just drop an emoji in the chat box or whatever it is, just make a reaction in the chat box. Let me know that you're with me and I'm not speaking to myself alone. All right, beautiful, beautiful. So as a result of this, all right, as a result of these patterns that price begins to make, is the reason why we can now begin to talk about trend lines, all right? And a trend line is simply a line that that serves as a boundary of trend, all right, as a trend boundary. And I'm going to explain what that means. So Mr. Tim described a trend as, you know, a succeeding series of highs, if it's of higher highs, if it's an uptrend, or lower highs, if it's a downtrend. All right, and that's what we're going to be looking at tonight. So if this is, or this, if this is an uptrend, right? You know, we already have higher highs. So somehow it should be predictable that the next, you know, what we are expecting is that price should come down and form a, let me see. We expect price to come down and form a new low. All right. This is what we're expecting. The price comes down to form a new low. All right. Which, because we are in an uptrend, we expect that that new low should be higher than the, you know, should be higher than the previous low. All right. Because we have this low here, and we see that the lows have been getting higher. So right now at this point, what we are expecting is a higher low. All right, that's what we're expecting. However, we need to be able to know, all right, we need to be able to discern where that next low will be, all right, where that next low is most likely going to occur. So what we can do is we can draw a boundary, all right. You know, in mathematics, it's called a slope. In maths and physics, you know, when you begin to draw graphs, it's called a slope. So you can draw a slope of the previous two lows, all right? You can draw a slope of the previous two lows and then use that to as a possible indication of where the next low would most likely originate. All right? So as a result of using this low and this low, all right, what we're expecting is that price follows the pattern and gives us another low somewhere around here. All right, somewhere around here. Now, in order to make this more interesting, how many of us are familiar with chart patterns? You know, probably you've taken courses or you've studied certain things and then, you know, you've been taught about chart patterns. Is there, how many of us are familiar with it? If you are, just drop an emoji or a comment in the chat box. Let me know. Chart patterns, be it double bottom, double top, M, W, triple bottom, triple top, you know, whatever the name your tutor might have called it, you know, wedge, triangle, head and shoulder, inverted head and shoulder. All right, beautiful. Now, I need you to be able to think of any chart pattern that you might have been taught. All right, any of those chart patterns that you might have been taught. All right, I need you to think about it. And right now, I'm going to show you how trend lines actually influence each of those patterns. All right, I'm going to show you how trend lines actually influence each of those patterns. Okay, all right. We're gonna get to discuss that a little bit then. We're going to get to discuss that a little bit. So let's get into that. So for those who are not familiar with chart patterns, all right. But Ms. Rose, have you gone through the beginner videos, the previous videos that were dropped on the Telegram channel? Have you gone through all of those? Please let me know if you have. Please just let me know in the chat box if you've gone through, you know, the previous videos. Okay. All right. So the next thing is, when we want to talk about chart patterns, I know that some of us are familiar with it, but for the sake of those who are not, all right, we are going to need to talk about chart patterns. Oh, I sense I thought as much, because when you go through the beginners videos, you would have come across chart patterns. But nonetheless, I'm just going to talk about it briefly. All right. So we know that basically, when price begins to move, all right, there's a particular structure that price follows. All right. The same way we talked about the fact that an uptrend is higher highs, higher lows. All right. A downtrend is lower highs, lower lows. Okay. And based on that, we can see that at this point here, where price makes, you know, where price breaks below the previous low, all right, we can say that price broke structure. All right. Somewhere around here, we can say that price broke structure. All right. So that it's going to give us a new low that is lower than the previous low. All right. And then we can now have a new high. Okay. And then from that new high, we can now see price maybe break lower. All right. Something like this. Okay. Which would give us another break of structure. All right. So if you're not familiar with market structure, please let me know after this session so that I can refer you to the required materials to get that understanding. So as a result of this, all right, there are certain patterns that price makes when it is either about to reverse or when it's about to make a continuation in a certain direction. All right. One of such patterns is that there are certain times where we have price around particular zones like this. All right. And then we see price come into that area like this. All right, twice. And then we have a break of structure at this point. Okay. Those who trade chart patterns will tell you that this is a double bottom. Okay, this is a double bottom, and then from this retest, they can take a trade, all right, which is often described as being equal to, you know, this. All right, so these two, how do I describe it now? These two lows, all right, that are almost equal with one another is what we call the double bottom, all right? And the way we trade it is that when we have a double bottom formed, we wait for price to give us a break of structure, all right? So when price breaks structure, this point where price broke the structure is often described as the neckline, all right? That's what they call the neckline. Okay, so that is described as the neckline. So we wait for a break of the neckline, all right, so that price can come back to retest either here or anywhere. Once price comes back into this zone and does not go below these lows, all right, then we enter a trade for a buy. All right, the same thing applies when we start talking about triple bottoms, all right, or inverted head and shoulders. Okay. However, I'm going to show you how I trade my own double bottoms. Reason being that, let me quickly show you this. And I need to see confirmations from those of you who are familiar with double bottoms. All right. There are times when those who trade double bottoms will tell you that price needs to retest here, all right, before it starts bouncing back up. So what they do is they enter the trade from here. All right. But how many of you have ever entered a trade like that and ended up having an extreme drawdown, like a serious large drawdown before you, wow, please go through the previous videos, the beginner training videos. All right. And I think that we might look into chart patterns again during tomorrow's class. All right. Hopefully during tomorrow's class, we'll go through chart patterns again. All right. So those who are familiar with double bottoms, if you've ever entered from the neckline here, you took the trade from the retest of the neckline, all right, and price didn't, and the movement did not favor you, please let me know in the chat box. Just drop a comment in the chat box. Let me know. Where are my chart pattern traders? Oh, beautiful. So now this is the reason why I don't use just the neckline for deciding my entries. All right. So Mr. Tim, yeah, I do understand. I do understand that definitely must have been really a really painful experience. But nonetheless, now the reason why I trade more with trend lines is because for me, this is my own approach to trading it. All right. One, I might draw something like this. All right. And then see price break out and retest this zone. All right. Secondly, this also is a possibility. We might see price break out of there, come back this way, all right, before going back up. All right. So what I do basically is I use my trend lines as a further confirmation. All right. Now, this is still an introduction to this concept. All right. In the next session, I'm going to be showing us in depth. I'm going to be showing us some really, really deep expressions of how to actually maximize these things. All right. I'm going to be showing you specific patterns, all right, that you can trade. And it's not going to be like the double bottoms, triple bottoms that you're familiar with, MWs, whatever, head and shoulders and the likes. I'm going to show you with a very detailed breakdown of what I trade and how I trade it, all the patterns, the way they correlate and the way they work. All right. So having said that, if I'm going to clear the screen now. So we're going to start with one really interesting concept, and that concept is the concept of wedges or consolidation, accumulation. During our last class last week, I think, yeah, during our Friday session last week, I was showing you a pattern like this. One of the trading patterns that I showed you last week was, we have an accumulation like this. We have an accumulation like this, and then price breaks out of it, comes back for a retest like this. All right, how many of us still remember? All right, so this is the regular concept of accumulations, all right? However, I'm going to be showing us something different today, all right? I'm going to be showing us something different today, which is I'm going to be starting with it's an accumulation pattern as well, all right? It's an accumulation pattern before a distribution, but I'm going to be showing us my own adaptation of it. So when we have an accumulation like this, all right, this is a channel. All right, that's a channel, and it's one of the most popular patterns that people actually trade, all right, in the financial markets. Okay, because once that channel gets broken, we can see a retest of the channel, all right, and then a continuation upwards. Now, one of the reasons why I trade this so well or so many times is because oftentimes, all right, as Mr. Tim will testify, Mr. Tim, I believe you can see what's going on here from this pattern. Because here now we've had a break of this, we've had a break of this, So now, we've had all of this amazing break of structures. So the reason why I like to trade this kind of channel, many people believe that this is not a real pattern. It's not a realistic pattern. But for me, I think it is. All right, where we have a downward sloping channel. All right, prices in that downward sloping channel, and then we see a breakout to the upside, and then price comes back to retest. Now, if you measure this movement with the Fibonacci, all right, you discover that where this happened, all right, is roughly between 61.8 and 76.4. All right, which is what I describe as my own sweet spot. All right, so this is why I love to, because you discover that this also aligns perfectly well. This aligns perfectly well with the upper trend line of that channel. All right, so this is one of the patterns that you don't ever want to joke with. All right, so that's pattern number one. Don't worry, in the second session, we're going to look at all of these things on the chart, all right? I think it's going to be more relatable when you see it on the chart. All right, but just take a screenshot of this pattern right now. Take a screenshot of this pattern right now. We're going to be looking at a couple more patterns, all right? And then after this, we'll go into the chart and then just see examples of all of these patterns. All right. Are we still together? Are you people still with me? Are you still with me, please? Are you still with me? If you are, please let me know in the chat box that we're still together. All right, all right, all right. Just drop an emoji. Okay, beautiful. Beautiful. So this is it. The next thing we're going to look at, the next pattern we're going to look at is an inversion of this pattern. All right, it's an inversion of this pattern. And it's a pattern where, we have this, maybe this nice bullish trend. All right, and price begins to do this. So what I do is, you see this channel. Oh, okay. Sorry about that. Let me use a different color for the trend lines. All right, so we have this, and the expectation, or my expectation, would be that price comes back into this area, all right, and then drops. So that is the second pattern. Oh, sorry, this should be pattern number 5. I think in the beginning, we looked at 3 patterns on Friday. Last week, Friday, we looked at 3 patterns. So this ought to be pattern number 4. This should be pattern number 4. And this is pattern number 5. All right, pattern number 5. We're going to still do some practical examples of these on the chart, all right? But please take a screenshot of the 2 patterns that you have on your screen right now. Just take a screenshot of that. Okay, I believe that everyone has done that. So let's look at some more patterns. So another pattern that I love to trade, all right, we're going to look at 5 patterns right now, all right? In the next session, we'll see all of them on the chart, and then tomorrow we'll look at some more patterns. So let's say we are having this downtrend. All right, let's say price is making this downtrend. Okay, so one thing that I like to see is maybe we now have something like this. Now, this is looking like a complex pattern, but it sincerely is not. All right, it sincerely is not. So this is also one of my favorite patterns. All right, now these are not patterns that you will come across in books. Please note that these are not patterns that you will come across in books. These are patterns that I created myself, all right, for my own trading pleasure. All right, so these are not patterns that probably you go on YouTube and maybe you do some research on YouTube and find. No, these are patterns that I actually came across myself from my observation of price and the way price moves. All right, so what we have here, all right, is that we see equal highs. All right, we see equal highs here. Inside of a consolidation, we see equal lows as well. And then we see price break above that consolidation, all right, and also break above a trend line, all right. And then from there, we have this high, this higher high, and then we have this higher low, all right. So this would be pattern 6. And then we could have the reverse. We could have the reverse version of this. Mr. Prince, please let me know, are you familiar with the concept of trend lines at all? Like how to draw trend lines? Oh, that means that you haven't gone through the previous videos that I dropped, the beginner videos that I dropped. So please do that as soon as possible because you actually need it. All right. And you didn't come across trend line in those videos? Okay. So this is what we're saying, all right? This is just a reverse of this. Oh, no, not these particular ones. These ones are actually patterns. These are patterns, all right? These are patterns. These are just patterns, all right? There's a video that I'm going to drop on the Telegram group. I think I already dropped it, all right? But I'm still going to relate back to it so that we can all flow better with it, all right? So you see that we have our entry from here and then price comes back and gives us lower lows, all right? So now this would be pattern 7, all right? Now, before we round up, let me just quickly say this. All right, please take a screenshot of the drawings on the chart so that I can quickly show us what I want to show us. All right, now there are different types of trend lines. All right, there are so many different types of trend lines, and each type of trend line has a differentiating factor. All right, so I'm going to show you. Let me just quickly mention this so that I know that I've done that. All right, I'm going to get into that. So types of trend lines, let's quickly do that. The first type of trend line that I'm going to be talking about is we have major trend lines. All right. We have major trend lines. We have minor trend lines. We have internal trend lines. All right. And now these 3 types of trend lines, all right, I'm going to show you examples of them. So for example, you have price moving this way, you know, and then it begins to make all right, it begins to make movements like this. Now, what you need to understand is this. This trend line, for example, this one, or let me see. All right, yeah, this one. All right, that is a major trend line. All right, that is a major trend line. Reason being that as far as we can see, there is no other trend line that can be farther than it. All right, is the farthest trend line that price has tested so far, or that price has created so far. All right. However, we can see this as a trend line as well. All right. Those are trend lines too. All right. And those are referred to as minor trend lines. All right. This is another major trend line. Okay. For the eyes. And then let me change the colors. Let me change the colors. Let me use this. So these are the major trend lines. All right. That's the major trend line. And then the ones colored red are the minor trend lines. All right. Now, the difference between these is that the way we know whether it's a major trend line or a minor trend line is its distance from the price. All right. As price begins to move, how far is where we are now from where we're going? And then let me see if I can give us an example of an internal trend line. So let's say price does this. Yes, exactly. So let's say price does this. All right. It would be because this acted as an internal trend line. And an internal trend line is simply a trend line that has actually been broken before. All right. It has actually been broken before. But when price gets there again, we believe that price would react. All right. We believe that price would react when price gets there again. All right. So we're going to end this session here. Please just give me 10 to 15 minutes. Let me just quickly, take some fluids because right now my mouth is really dry. So let me take some fluids. We'll come back for the next session in the next 10 minutes. All right. By 10:20, we'll be here for the next session. All right. So please stay tuned. Don't go anywhere. I'll be with you shortly. All right. God bless you. All right. So I'm ending the session here, but please don't go anywhere. The next session starts by 10:20. God bless you.